Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
Hello and welcome. Now before we start, I just want to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, LME 3-month copper. The market stabilization phase is now over and prices are accelerating higher away from the supports that have run this market for so long. Just to clarify, the key congestions that are now supports below are and have been between 97.50 to 99.95, then between 93.95 to 96.06, and between 91.83 to 91.86. 2 weeks ago, prices pierced and stabilized over the bright red shallow bull channel from mid-May to late September, currently 97.04 to 10.215. Initially coming up against the resistance of the dark blue middle tine, currently at 10.387. But challenging that and overcoming it late last week. Prices are now challenging the next series of resistances made up from some previous all-time highs at 10.745 and 10.847. In the process of rising higher, the market has already achieved the target for the break above the bright red bull channel of 10.706. This now opens a question, quite a large question, as to whether the whole action since the low in April is perhaps a very large bullish halfway hesitation. Now, if that is to be the case, then we would be looking at potential as high as between 11,400 to 11,500 area. It is this point that I feel obliged to point out that the dark blue upper tine of the same large bullish shift pitchfork mentioned earlier currently runs up at 11,509. Thus a useful, dynamic, bullish marker to remember. However, for all this, we have to punch up through this and stabilize over the two previously mentioned former highs at 10.745 and 10.847, as well as the all-time high made in May at 11.104. LME 3-month aluminium. As I've stated here many times, there are a number of patterns here, one within another, all happening at the same time, all affecting the market in their own way. Of all the features, by far the most consistent one has been and still is the bright red shallow bullish shift pitchfork for the mid-December 23 to late July 24 move. Back in March and April, we moved below the bright red middle tine, currently at 27.13, and down towards the bright red lower tine below, currently at 24.04, consolidating and starting a fresh build-up, such that 3 weeks ago we were once again challenging the bright red middle tine, this time from below, as we also have done this week. In the more recent past, we also had a mid-April to mid-August dark blue bull channel, but we pushed down below the dark blue lower bull channel line, in the process possibly creating a sideways rectangle pattern, with the base of support being the long moving average below on a closing basis, and that's currently at 25.75, and what turned out to be a somewhat weak 50% Fibonacci line, the big old 2008 to 2022 move at 26.75. It was found 4 weeks ago that the top side gave way under inspection, and instead of a sideways rectangle pattern, we saw created a shallower bright green bull channel. That's currently 26.31 to 27.42. The bright green lower bull channel line is robust enough, but I have doubts about the top side bright green upper bull channel line, as I suspect the now broken dark blue lower bull channel line may be a safer resistance, the one that is a little higher up and is more acute. Now, 3 weeks ago I set out some targets for the break higher of a primary target X up in the 27.60 area, just over the 50% Fibonacci line of the November 2015 to March 22 move at 27.53, and with a harder to reach secondary target X1 up at 27.82. area up in some fairly free area overhead. This break above the rectangle, because that's what it is, opened the door to look at the whole action as a possible bullish hesitation, with potential up to even the 2880 area. But, as I said last week, and I quote, "This is just a possibility right now, and I would like to see the market's action as it moves higher, if that indeed is what it has in mind." For now, I will maintain these topside targets for this pattern, as they look doable. LME 3-month lead. A mid-April bull channel saw the market breach on the downside 11 weeks ago, then seemingly repair, only to finally break lower 10 weeks ago. The lower trend line was originally seen by me as part of an ascending triangle pattern between May to June, but it developed into a mid-April to late July bump and run reversal top pattern, as well as part of a not finished bull channel. Going to the bump and run reversal pattern, as I said 7 weeks ago, and I quote, "If this pattern decides to follow through on the downside, then we will have a primary target X down in the 1964 zone, just above the bright red extension to the August to December 2024 head and shoulders neckline, and a secondary harder to reach target X1 down at 1916, coincident with the low of January this year," end of quote. The second concerted attempt lower in early August travelled further down than the one in mid-July and reached the bright red neckline, currently at 1960, of the August to December 24 head and shoulders pattern. And in the process of tripping lower, the primary target X at 1964 was reached. But that was all, with the secondary harder to reach target now retired. Prices have since then moved back up a little, hesitating around the various moving averages and the congestion, the thin congestion between 2001 and 2003, before making a quite shallow bright green early August to date bull channel, and that's currently 1983 to 2031. We have gradually followed this shallow bright green bull channel higher as it led us out of the earlier rectangle pattern. Finally, there's one additional point I would like to make, and it's a point I've been making here since the start of this year and will continue to do so going forward. It has been and still is to me the most important point of all. So at the end of December last year, we saw that 2024 had created here a very large and rare annual key reversal down here in LME 3-month lead. Hence, one should look at all things going forward this year in this metal in the shadow of this longer term bearish pattern.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.